So Noah and I did our presentation on back market. And so basically right now we're entering into a time where electronics are now too expensive for the average American. And so phones went from being around like $200 to now being about like $2,000 at the higher end. And that's due to the fact that phone companies have gotten rid of like their 2-year contracts. And so that's made phones, the prices of them skyrocket because there's not those hidden fees within the 2-year contract. So 30% of adults with household incomes under $30,000 don't own a smartphone because they're too expensive, while 46% of them don't have home broadband services or a traditional computer. And so because prices are so high for electronics, a lot of Americans end up financing them now. And so that like includes like a 24-month payment plan. And so that means that they're locked in, and if their phone is to be like damaged or anything, they still have to pay it off unless they have like an insurance policy on them. And because prices are rising on electronics, the average smartphone upgrade cycle is about 3 years. And that's increasing because Americans are trying to hold on to their phones as long as possible. So in addition to the prices of electronics rising, there's also an e-waste problem in the US. So Americans throw away about 9.4 million tons of electronics every year. And 70% of the materials that come from those electronics occupy our landfills. And 70% of the cell phones that are in the landfills could be reused, but only 17% of them are recycled. And so that's where back market comes in. Back market's a global refurbished electronic marketplace that was founded in 2014 in France. And they've expanded to Spain, Germany, Italy, Belgium, the UK, and Austria. And so they've created a marketplace that kind of serves as like a middleman. So it connects certified sellers that restore these used gadgets with consumers through an online marketplace. And because the secondary market, or because they're selling used products, it makes these electronics more affordable to consumers. And then it creates a circular economy, which is essential for the US waste crisis. And so how back market differentiates themselves from like eBay or like a KSL is that they refurbish the product to like a manufacturer standard, and then they list them at affordable prices, but they also come with like warranties, and they have a really great customer service program. And so right now the refurbished electronics market is bigger and growing faster than many think. So we're shifting from a time where like buying secondhand electronics was kind of considered like taboo or sketchy, to a time where now buying refurbished is like an integral part of like a consideration stage in the purchase decision of a buyer. And so consumers are now realizing that that refurbished electronics can provide the same quality, but at a more affordable price. And that it's also more attractive as we're kind of shifting to a time where consumers are now buying like and being more environmentally conscious. And so the industry was valued at $10 billion and is expected to be worth about $39 billion 2025. And so right now we're seeing a decline in the primary market as it only grew about 3% in 2017, while the secondary market grew about 13%. And so research from Deloitte Global predicted that 10% of the premium cell phones will have about 3 or more owners before they're retired. So that gives back market a really great opportunity to kind of capture the market, especially because it's growing. And so how their business model works is they don't refurbish their products in-house. Like I said, they kind of serve as a middleman between the refurbishers and the consumers. So they're connected with over 600 certified refurbished outlets. And those range from like small mom and pop local businesses to like popular outlets like Bright Star and Apple Refurbish. And the outlets get 10% of the sales on the refurbished product. And they must go through like a trial period with restricted sales when they start refurbishing for back market until they can prove themselves reliable. And so that just kind of helps ensure like the quality of the products on back market are up to that manufacturer like the manufacturer quality. And so because back market offers warranties and customer service, they have a really high customer satisfaction. So in the past year, they've received over 14,000 reviews, and they've gotten an average rating of 4.6. So every purchase from BackMet comes with a 30-day return period, a 6-month warranty, and then a customer care rep. And the company has kind of founded itself on 7 pillars. Those pillars are access, quality, expertise, swag, service, transparency, and discount. So back market's competitors, our biggest competitors are Recellular, Gazelle, and Hello Cool. The market's highly fragmented, so there's not really like a household name for the refurbished electronics marketplace yet. Nobody has like a huge amount of market share. So like Recellular, for example, they're a reseller and recycler of cell phones, but they only sell to like B2B businesses. So, and they don't have an online platform for consumers. So while they're in the refurbished electronic marketplace, they're really not competing with back market. It's a different type of customer. And Gazelle, they buy and sell devices to and from customers, but it's more like slightly used and lightly refurbished. So kind of the idea is like a kind of like an eBay or a KSL. There's no like warranties, or there's not like a customer service rep. And Gazelle has seen like company losses, like loss after loss from 2013 to 2015. And they've had less than 1/3 of the funding that back market has received. And then Hello Cool is just kind of like Gazelle. They're just like another eBay. So there's like no consistent refurbishers. The product isn't certified, and there's no warranties. So like I said, the market's pretty fragmented, and there's really no like big dog in the game right now. And back market's competitors are kind of competing on a different, they're kind of appealing to different types of consumers. And so basically they kind of have a sustainable advantage because the market is growing exponentially, and now we're seeing that shift from consumer tastes and preferences, and especially as electronic prices are increasing. And then the fact that back market is offering like warranties and return periods where you usually don't see that when you're buying secondhand goods. Oops.
Okay, so marketing and partners. I'm going to go through some survey results that were found in 2014 with 1,407 participants. They found that 82% of people would prefer to buy their refurbished products online, which is great for back market because they don't have a brick and mortar location. They just have a website. 68% of people buying refurbished devices find warranty an essential part of the purchasing process. Back market offers a 30-day money-back guarantee, 6-month warranty, and then they have future plans to have repair shops all over to like fix your electronic in case if you don't want to send it in. You just need to fix like the aux cord or something like that. 81% of consumers are likely to recommend buying refurbished products to friends and family. So what back market's doing right now to focus on marketing is they're just having really excellent customer service. So people are satisfied, and like people move it on to their friends and tell them this is the way to do it. And then back market's main partners are their refurbishers. The refurbishers are kind of everything for back market. And the refurbishers need an initial trial period before they get accepted, just to make sure that their products are quality enough. And then they have a 23-point test before getting used on the platform. Back Market also has many social media outlets. They're in many countries that speak many different languages. So not all of them have an impressive amount of followers, but they have like, I think 4 Twitters at least. So they have that going for them. Next slide. This is their management team. As you can see, they're all very young. And they're all French names, so excuse me. I'm going to get some of them wrong. Thibodeau, Thibaud, I have no idea how to say that name. Anyways, he's the CEO. He's the founder. He's in the middle. He graduated from the University of Monterey in International Relations in 2008. Quentin, he's on the left. He graduated from Paris Diderot University in computer science, and then also in 2008, and then he got a master's in 2010 in system networking. And then Vianney, he is the CCO. He's on the right. He graduated from Paris Sorbonne University in 2010 with a master's in digital media. It's important to note that all 3 of these guys are under 35. I've watched a bunch of YouTube videos on them, and they are passionate. They fully intend on they want to be the main supplier of refurbished electronics. They would like to be so big that first, like they want to compete with Apple and making Apple sell less products because so many people are just buying used and reusing. These guys really are passionate about green waste or electronics waste. There's some green dudes, that's for sure. All right, next slide. Okay, financials. Financials are really hard to find on this company because they are both French and private, but this is what we do have. Sales grew from 4 million in 2015 to 100 million in 2017. Their cost of goods sold in 2017, or low cost of goods sold in 2017, they had a gross profit of 93 million. In 2018, after the expansion to the US, they were able to increase their sales to 300 million. The big issue this firm has right now is they need to lower operating costs, or they just need to increase sales at this same crazy rate while keeping operating costs the same. Yeah. Okay, next slide. Okay, funding. They only have 5 investors: Goldman Sachs, Group Arnault, Aglaé Ventures, Eurozeo, and Daphne. Goldman Sachs is their largest investor. They invested 120 million in the first quarter of 2020. So that was very recently, which would make me think that this company has big things coming up. And then Daphne and Aglaé were the first investors, giving this company 7.6 million in the second quarter of 2017. So this company's received a lot of funding. Very impressive for 3 dudes that are under 35 with such an ambitious goal. And then their exit strategy. This company doesn't have any issue with getting funding, so I would expect them to stay private until they've captured a majority of the market. There's really no reason for them to go public because they can get all the funds they need without having to deal with so many of the things that going public gives you. They should be looking for partners and people that can provide them something. They don't really need to take any money. They need to find people that can help them expand. So people that either have insight into the business or are proven and expanding similar sized companies. And then I would expect this company in the future to have an IPO once they are the largest refurbished electronics player in the market. There's really no reason for them to have an IPO until then because they've shown that they have had so much success getting money so far. I think that is all for us. Is there any questions?
I have a quick question. Do you think eventually the company will try and not wouldn't be so much as the middleman and try and do like the refurbishing themselves and start that, or do you think they'll always kind of outsource it?
I can take this one, Catherine. I think they're always going to try to outsource it. Part of the genius of it, of like how it can grow so quickly, is they don't really need any physical assets. They kind of just need their partners. I expect them to grow their partnerships throughout the entire world. Maybe shift some of where they're refurbishing are to places that are lower cost, but I don't see them not using their partners.
Yeah, I think the way that they've structured their business, because they do outsource, it keeps their cost of goods sold really low. And so I can't imagine that they would want to switch to refurbishing in-house, because I think that would just increase the cost of goods for them.
I had a quick question about what they were refurbishing. So you guys mentioned they do a lot of stuff with phones. Are they doing anything with like computer components or like server components and stuff like that, or are they just focusing on phones?
Their largest product is cell phones, but they also offer anything from like laptops to tablets. So pretty much just all electronics.
Yeah, pretty much anything that's worth refurbishing. So they wouldn't refurbish, say, $100 printer, because there just isn't enough there isn't enough money to be made. But they did announce, I think it was last year, that they're starting to sell refurbished drones, which I think is pretty funny. But they do pretty much anything that's worth refurbishing.
Okay, cool.
May I also ask a question? You mentioned, Noah, a 23-point test. What is that?
I don't know exactly what goes into the test, but they check things like the quality of the phone, if there's any scratches, make sure the processors work so it's like still fast, cleanliness. There's just like I don't know all the exact steps, but it's pretty much just to check the quality and to make sure that it's
I have to check the products
yeah.
and stuff. Okay, thank you.
I have a quick question too. Do you have an idea of what they can do to lower their operating costs? Don't you think like stop outsourcing will maybe they will have higher cost of goods sold, but they could lower operating costs by doing that?
I think a lot of their operating costs come right now due to them just trying to expand so rapidly. So once that kind of starts slowing down, once they gain so much of the market, they don't need that. Their operating costs will stay about the same, but their share of the market will increase.
I have a question. So when they're reselling these products are they actually getting the product from the refurbisher, they inspect it, and then they send it to the consumer, or are they just like the online intermediary and it goes straight from the refurbisher to the consumer?
So they get the product from the refurbisher. It goes through like the 23-point test, and then it's listed. So they won't list it until it's like certified. And then it goes to the consumer.
Are there anything about their financials that are concerning to you guys? I mean, other than they can't figure out how to make money?
Yeah, so their operating costs, let me pull up, I have their income statement actually. So their operating costs are really high, which they have a net loss because of that. But we have their ratios here. And so let's see.
Katie, if you can bring those up, I'd be curious to know what part of their operating costs are marketing. I'm curious as to their customer acquisition cost, if you have that.
Yes.
The information we found didn't have any amount of money spent on marketing, so it was really hard to find how much they pay to get a customer.
Yeah. So obviously, they are doing a lot of it. So
yeah, you'd imagine. I kind of don't have really too many problems with their financials just because they're growing at such a rate and they're so funded by like venture capital companies that, you know, when like Amazon was turning, you know, a negative net income, nobody was really worried because everyone knew that they were, you know, set to destroy, really take over the market. So I'd like to view this as the same.
Yeah, I guess I'm looking at their liability to asset ratio, and would be a little concerned about the drag on earnings from their debt servicing.
Yeah.
Yeah, they are pretty debt heavy. Back market is. Sorry, I'm just pulling up I have their balance sheet from 2017 as well as their income statement.
Katie, do you know if they have long-term debt, or is there actually a working capital issue here? Because it looks like if you look at total debt to equity, that's 7.3%. So I wouldn't say that that's huge. And then when you look at total liabilities over divided by total assets, that's 64.4. So that tells me that the short-term liabilities actually might be what's causing a drag.
Yeah, because if you look down here, you don't see their short-term liabilities articulated, but that has to be where it is, isn't it, Jens?
Yeah, so my guess is that, and I don't know this, but if I had to guess, I would guess that they have a lot of inventory. That they need to book that inventory as it gets refurbished and is waiting to get sold.
Well, but is the inventory their inventory, or is the inventory of all these refurbishers that they use?
It should be the latter.
Yeah.
But I'm just trying to figure out what can cause.
No, I agree.
Interesting.
Are you able to share that balance sheet or income statement with us for a moment, Katie?
Yeah, sorry, I'm just bringing it up right
It's
now.
okay. Because I am kind of curious about that. I wonder how much of this is short-term liability with them floating big payables, and if it's got to do with how they're financing the way that they do this refurbishment.
Are you able to see my screen?
I can see part of your screen.
Yeah, let's
There
see.
we go. Looks like we're coming up again here, Katie.
Okay, can you see it now? I have the income statement.
Yes.
So interest expense, well, they're not showing any interest expense in 2017, so that would suggest no interest-bearing debt. And you're right, they don't break out marketing. Gross.
And it's low cost of goods sold, so that's not that might tell us that there's not much inventory.
Yeah, and there shouldn't be. Their other operating expenses category is huge. It's 8.3 of the 10.7 there.
And that's not really all that useful.
No. Can you let us see the balance sheet real quick?
So their total liabilities are pretty heavy compared to their equity.
Yeah.
The other current liabilities seems high.
Other current
It's
liabilities.
that current liability category, isn't it?
Yeah. I wonder what that is.
Interesting.
Maybe it's the way they facilitate the transaction on their side. Maybe they need to buy it off of the refurbishers and then forward it to the end user.
Yeah, I'm going to guess that's an accounting issue, right? More than anything else. Yeah.
Exactly. Yeah.
You know, and they're sitting on almost 13 million of cash. Well, that was as of the end of 17. That's going to have changed dramatically, of course.
Oh yeah, 17.
Very dramatically.
Yeah, and this is before they expanded into the U.S. We couldn't find anything on their financials once they expanded to the U.S. besides sales.
Yeah, I looked through a bunch of different sources to see what I could find, and I couldn't find anything more current than this in Edgar. I couldn't find anything in PitchBook. There's a little Yahoo something out there, but it was also the same 2017. Okay. What other questions, guys? Well, nicely done. And again, hats off to you, especially since the two of you took on what other teams did with 3 and 4 people. So nicely done. Good for
nicely
you.
done, guys. I have a few extra questions.
Please.
Yeah. First question, are they reselling carrier plans, you know, with the phones?
I don't think that they're selling plans from our research. I believe they're just selling the phone, and then those consumers are going to carriers and activating services.
Because that will that's a big pool of revenue for them to because there's a lot of competition on the carrier side, and if the sale of the phones actually shifts to refurbished, you will be able to control that volume, and you'll also be able to take a good take rate on advertising or selling subscriptions on behalf of the operators. So they probably have that in their strategy somewhere.
Yeah, their future plans, I think.
Yes, that's going to be a big pool of revenue. Do you think it's going to be hard for a French business to enter the U.S. market?
I don't think so, because their highest amount of like web traffic is from the U.S. So I think that they've already done pretty well, and they've kind of established their name here already.
Okay, interesting. Good answer. And I think it was you, Noah, you mentioned that they want to compete with Apple. So how much do they have to rely on the original equipment manufacturers like Apple and Samsung, Huawei, and the other guys who sell phones?
I mean, they definitely need to rely on them because that's where they get their product in the long run. But they want phones to have, 3 or 4 owners by the time they're done, which would take away sales from Apple.
Okay. And they're offering the warranty themselves, so they don't need to rely on the warranty that Apple can offer, right?
Yeah, they offer the warranty themselves. And I think that's why they're so meticulous about the refurbishing process, to make sure that it's something that they can warranty.
Okay, exactly. Because there has been a few issues where people have gone to a local refurbisher, gotten their iPhone fixed, and then it breaks again, and they go back to Apple and they don't want to honor that warranty because it hasn't been fixed in an Apple store or by an Apple certified refurbisher. So, yeah. But if they're able to take that position from Apple on the warranty side, they don't really need them, because the phones that come in are from people, right?
Yeah, I mean, people end up selling them to a refurbisher.
Okay, yeah.
Refurbisher fixes them and then sells them, or does their transaction with back market.
Interesting. So they're able to disintermediate the most powerful company on the planet.
Yeah.
Good answer. Thanks.
So, to address the previous question too, so 78% of their traffic comes from the U.S., 10% comes from France, and then Germany and Spain have about 1.5% of their web traffic. So they've already really captured kind of their place in the U.S. market.
Okay, excellent. How much was from the U.S.?
78%.
78. Wow.
That's impressive.
That is impressive. This was a really interesting presentation, guys. Thanks a lot, a good job on finding financials.
That was Rick. Thank you, Rick.
Okay. That was Rick.
Some of you guys know that I'm familiar with a company that you know of as Bits and Bytes, and that has about a year ago started to go into the same market from having been predominantly just a computer refurbisher. And they have switched much of their activity now to this marketplace. because it is so much more profitable. Now, they're an insignificant part of the market compared to backwater, but this is a very interesting part of the market. Well, nicely done, you guys.